Hey guys, this is Jace. Welcome back to MEXC Fans channel. In my previous video, I have introduced a very popular product in the crypto space, leverage ETF and its advantages compared to products such as spot and futures. In today's video, let's continue the topic of leverage ETFs and find out what are the similarities and differences between leverage ETFs and leverage tokens. To put it simply, leverage ETF is a type of perpetual leverage product that magnifies the price changes of the spot product and aims to provide leverage gains of the underlying assets. The name of the leverage ETF is represented by cryptocurrencies plus leverage plus long-short direction. For example, BTC3L means a 3x long for Bitcoin, while BTC3S means a 3x short for Bitcoin. If the Bitcoin price goes up by 1% on that day, BTC3L will go up by 3%, while BTC3S will go down by 3%. A leverage token is similar to a leverage ETF. They are both tradable products that seek to generate a daily return that is a multiple of a specified asset's return. For example, a 3x return of Bitcoin. The leverage tokens from the FTX platform are such examples. Official data shows that FTX leverage token is a tool created to meet the needs of some trading strategies, which track the performance of the underlying digital assets and generate 3x returns. For example, ETH Bull is a 3x long for Ether. However, here comes the first difference, the issuance mechanism. Leverage token is issued on the chain. Every time a user buys a leverage token, the corresponding token will be issued on the Ethereum blockchain. And if it's burned, it will also be destroyed on the blockchain. This is the essential difference between leverage tokens and leverage ETF. So, leverage token can be understood as a leverage ETF issued on a blockchain. Therefore, when the trading activity on the Ethereum blockchain is very active, the trading fee of leverage token is high and the trading is congested as well, which does not happen on leverage ETF. The second difference is their issue prices. The issue price of a leverage ETF is $1, while the issue price of a leverage token is different. Data on the Ethereum blockchain shows that on 9 February, the price of FTX leverage token BTC Bull, meaning a 3x long for Bitcoin, was at $3,094.31. Similarly, the price of Binance leverage token BTC UP 4x long for Bitcoin was at $48.02, while MEXC leverage ETF BTC3L was at $0.185. Thirdly, leverage ETF has a share merging mechanism. From users' perspective, the tick size after the merge will become higher. However, if the share merging mechanism is not performed, when the tick size of the crypto becomes too low, the trading slippage will increase and losses will increase as well. In fact, leverage tokens and leverage ETFs as emerging derivatives in the crypto space are not well known by most investors yet. Take the leverage ETF as an example. We are going to explore its rebalancing mechanism, which is very important. Rebalancing is divided into periodic rebalancing and non-periodic rebalancing. MEXC's leverage ETF product will be rebalanced periodically at 12 midnight Singapore time every day. Periodic rebalancing is essentially what the platform does to maintain the 2, 3, 4 or 5 times leverage of an ETF. In addition, the platform also needs to carry out risk hedging on other derivatives platforms to avoid the risk caused by the sharp rise and fall of prices, and maintaining the leverage ratio and hedging both incur a certain fee rate erosion. Non-periodic rebalancing refers to the scenario when the target spot price rises or falls by more than a certain range. The position will then be adjusted for the side that experienced a loss on that fluctuation. For example, Bitcoin rises by 15% in a short time, resulting in BTC3S falling by 45%. This triggers a non-periodic rebalancing. Some position will be sold and the leverage will then be restored to 3x to control the risk of the position. Leverage ETF has relative advantages if the investors tend to use low leverage to open positions. First, leverage ETF positions have higher capital utilization. This is mainly because there is no need to pay margin when opening a leverage ETF position. Opening and closing a position is like buying and selling on spot trading. So there is no need to occupy part of the position as the margin to raise or lower the liquidation price. Second, the leverage ETF rebalancing mechanism enables it to have the benefits of compound interest investment. After rebalancing at 12 midnight Singapore time every day, the profit of the position is automatically added to the newly opened position, which is suitable for trading in the bull market. Alright, that's all for today's video, and I hope you have a better understanding of both leverage ETF and leverage token. Please remember, crypto is a high-risk investment. Know what and why you invest, and always DYOR. So, do you prefer to trade on leverage ETF or leverage token? Please comment below and I'll see you soon. Bye!